We're Jess and Luc Boiron, and the highest and best use of our business is wholesaling.
Thanks for tuning into the Highest and Best Use Real Estate Podcast, the show where we talk about techniques to optimize your land, structure, skill sets, and time, as well as the highest and best use principles to make your business more profitable, productive, and efficient. I'm your host, Ryan Carr, reminding you that good deals are found, great deals are created. Oh my gosh, today I'm so excited. Jess and Luc Boiron are on the show. Guys, thank you so much for being here.
Thanks for having us.
Okay, so you are two of the most humble people and helpful people that I've ever met. You have a company called Bliss Realty doing literally hundreds and hundreds of wholesales every single year. And you also happen to be, correct me if I'm wrong, the largest wholesaler in Canada. Would that be fair?
Yeah. We haven't heard of anyone bigger.
That's incredible. Like I've known you guys for years, and to see what you've built from then till now is amazing. So kudos. Thank you for being here.
Thanks for having us, Ryan. Yeah.
I love it. So I want to kick the show off today. Basically, I want to find out the highest and best use of your wholesaling empire. So we'll get into who you are and how you got to this point. But three key topics of the show that I want to kick off with today are how this got started. So like what made this the highest and best use of your time, and how did you decide to go in this direction? That's number one. Number two, what does the business look like today? So both internally and externally, like how is this functioning on the back end? What are the mechanics under the hood of how this is working? And what are sellers and buyers seeing out in the field? Number three, looking back, would you do it any differently? Would things change? What would your team say about you today if your team wasn't here and I was to interview them? What would they say about you today as business owners and operators? And how does that look? So 3 key points of the show. That's what's going on.
Okay. You're going to have to ask them one by one.
I will.
It's terrible,
we're going to break it down. Why don't we just kick it off by introducing yourself, who you are, and where you're from. Jess, kick it off.
Sure, I'll kick us off. So my name is Jess and Boiron. I'm originally from Etobicoke, from Toronto. Now we live in Ottawa with our 2-year-old daughter, Luc and I.
Oh.
Yeah. My name's Luc. I'm Luc Boiron. I'm also from the GTA. I grew up in Thornhill. And
did you really?
Yeah.
I didn't know that.
Yeah, actually on the Markham side of Thornhill.
There you go.
And yeah, Jess and I actually met in law school. So we both did an undergrad in business, and then we met in law school doing a joint law degree and MBA.
Mm-hmm.
Yeah, and now moved out to Ottawa as well for a little more peace and quiet and taking care of our little girl.
The house that you moved into, was it a wholesale? Did you find it off market?
This was the first property, I think, in recent years that we actually bought off the MLS.
No way.
That's the current house that we've lived in for a few months.
This is blasphemous.
It is. It's a really big deal.
No.
When we moved to Ottawa, it was into a house that we had bought through our company.
Right.
And then we lived there a little over 2 years, I guess. And now recently we moved to a different house that we wanted to because it's on a small lake, and we were both kind of dreaming of our little girl growing up swimming in the lake in our backyard and stuff. So we're just 30 minutes outside of Ottawa, and kind of get that mix of rural and close enough to the city.
That's the best proximity, eh? Being close to the downtown core where you can do those downtown things, whether it's like shopping or restaurants or nightlife, but just being far enough away that you can enjoy the nice stuff of being in the country.
Yes.
Yeah, and we really found this house. We were looking for a cottage. We have some cottage rental properties, but they're a little far from Ottawa.
Yeah.
And with the little one, we were thinking, hey, can we find somewhere that's, within an hour and a half drive from Ottawa? And this house came up on our search because it's a waterfront home. And there aren't many waterfront homes that are, long-term homes that are half an hour from downtown. It was just such a unique property. And the day it was listed, it popped up and both of us said, we got to go see this place. This is a dream home for us. So
I remember when you guys posted on Facebook, you're like, oh, we're going to this waterfront property. We can't wait to buy it. And then you did. And you did.
Spent a little more than we wanted to, but
You know what though? I think that's something so interesting. Being on the investment side, building businesses, doing all the fun, crazy things that are out there. When you find something for you, you have the opportunity to spend a little bit more because you spent so much time making money that every now and again you got to treat yourself.
Yeah, and the previous 2 houses that we lived in, they were through our wholesaling business that we found them, and so in that mental space that we were in, we were thinking, okay, this is another way to build our business, right? We get a really good deal. We live there. We can improve it, right? Eventually when we move out and we sell it, we can get that gain. And so this was the first property that we bought because we loved. And so I think that shows a bit of our growth too, where we're not 100% focused. Every single thing we do is about the business, which is where we've been the last number of years, right?
Sure.
To build it all out.
Yeah.
This was really for us.
How do you think lawyer training, coming from school, doing the lawyer thing to today, how do you think that's affected your business and your mindset doing something like this?
I mean, I don't know that it was necessary, but it helps. Going to law school and working in law. Jess worked much more in law than I did. It gives you a certain kind of, you need to be detail oriented. You need to take care of the details. A lot of people aren't good at that. It just teaches you to be a little more critical and understanding nuances. And it could just be down to writing clauses in contracts and things like that.
Sure.
But understanding, reading zoning bylaws, things like that. So was it necessary to go to law school for this? Not at all. But yeah, I mean, when we're talking about, highest and best use of our time, Jess was on partnership track at the largest law firm in Canada as a corporate lawyer. And it was only as, she was spending evenings and weekends on more of a rental business because she loves it. Scouring the MLS and then having to work late nights to make up for it and all this stuff. And
being a lawyer is like no small feat. You're putting in the time.
It was long hours. It was a lot of work, and it was challenging. Especially
I've seen every episode of Suits. I know everything about being a lawyer.
It's just like that.
Yeah,
that was exactly my life. No, I'm kidding, but
she actually worked in the buildings where they were filming those.
Yeah, I worked in the office building.
Bay in Adelaide or something. Adelaide,
exactly that building. So, no, and it was. It's a way of thinking, right? That you learn in law school. That's a very critical way of thinking about issues that come up. And so I think that helps me a lot with problem solving because, in real estate, things go wrong all the time.
No.
Right?
Come on.
I know, it's
Can
wild. Every day something's going wrong and you can either react emotionally about it, which inevitably we all do, right? Because emotions are tied. But then there's also the other side of taking a step back and thinking, hey, critically, what are my options here? What is my best option? How can I go about this in a strategic way that will get me to that, ultimate end goal that I'm trying to get to, right? And so just evaluating that and being able to look at different options that way was helpful. But I think what was also helpful was when we first started, we started as flippers.
Yep.
When we started our flipping business, which it was at that time before it morphed into what it is today.
This is like evenings and weekends type of thing, or you went full-fledged?
So
go for it.
Yeah, that was, we started it together, but the great thing was I was working as a lawyer. And so we had regular stable income coming in
nice.
That we were able to, live off of and use towards our business. Whereas, and I was, like Luc said, working evenings and weekends on the flips because that's the only time I had to dedicate. And Luc was working days, evenings, and weekends.
Yeah. We both articled at the same time.
Yep.
And then as soon as I got called to the bar, I left law and started flipping houses full time.
That's so funny.
And I'd been in real estate. I bought my first rental in 2007. And so real estate was always, I grew up in a real estate family. My father was a commercial real estate agent. When I was a kid, I wanted to be a commercial real estate agent when I grew up. And I got into the investing side. And I actually bought my first rental property in undergrad. And I thought, okay, I can't qualify for mortgages easily. How can I buy more rental properties? And my understanding was people didn't work full-time in real estate. I thought real estate was a side job.
Really?
So you would have a job.
Even with your dad being a commercial realtor?
Well, he was a commercial realtor.
Yeah.
So his job was a realtor, but on the side, he could buy investments. So I thought you had to have a job, and on the side, you bought investments.
Ah.
And so I went to law school for the worst reason ever, which was lawyers get paid well. Banks are going to want to lend money to lawyers. Therefore, if I go to law school and become a lawyer,
funniest motivation.
I can buy rental properties.
Wow.
I went to law school to buy rental properties.
Look at you now.
And only when I, it was coming out of law school, I realized maybe I don't need to actually do this law thing to buy rental properties. Maybe I can skip that step. What's the highest and best use of my time? And as we proved out the flipping model and wholesaling and built out that business, and we're buying rentals, and Jess was passionate about building our rental portfolio too, it became more questioning, was working in law, even though she was being paid really well, was that the highest and best use of her time? Right. When she has a passion for real estate and it's very good at building wealth. So what's the best use of her time too? When you're working so much, because she loved working in law, and if she could have stayed in a part-time role just to be part of it, she would have, because she loved it. But she also loved real estate and knew the power of real estate.
It's the forever push-pull.
Yeah.
Right. You're at the fork in the road. Which way do you go?
Exactly. And it's something that's got to give eventually, right? where at some point we had built out the business to be substantial enough where I was questioning, should I be putting those hours that I'm putting in at the law firm into our business, and would those returns be so much greater overall for our family,
that's a really good point.
Long-term wealth?
There's a nugget, right? That's like, where do you spend your time? Where do you spend your hours? To your point, if you can make whatever your hourly may be at the law firm versus your hourly as a business owner, I mean, come on. There's no comparison.
One of the things with law school training is it does tend to make you, a lot of lawyers tend to be cautious, which isn't always the best thing as an entrepreneur.
Right.
And the other side of it too is the income they pay you is very good. So from the beginning, it was something we were conscious of. It's like, watch out for the golden handcuffs. Because every year you get a big raise, you make more money, you're on practicum junior partner, then equity partner, etc. And you make a lot more money. So it traps you in that. And the biggest thing that traps you in that is, well, I'm going to make this much more money next year. And I work so hard, I deserve more. Let me go buy the fancy car, the fancy house, get the $400 bottles of wine with dinner, etc. And so you're making a lot of money, you're spending a lot of money, and you need to keep making money to sustain things. So that traps you in there and you can never leave. And so you have a lot of people who are career lawyers who end up being miserable. And some people aren't. Some people absolutely thrive and love it. But you have people trapped in that. And we were always conscious of that from the beginning. Let's be careful with what we're spending. And let's be conscious that, have the option to leave. Right? For Jess too, when she was working in it, giving us the option, we don't have to stay in that if there's a better way we can choose to, but you won't be handcuffed into it.
So then how have you taken those ideals and principles and rolled them into the business growth from when you first got started? You're flipping evenings and weekends. You're like, okay, we're going to leave the law firm. We're going to make a real go of this. How have you taken that and those ideals from then to today? Tell me about the journey from then to now.
Yeah. So, and there was almost two concurrent sides because Jess has always been pushing to build the rental portfolio,
right? Which
is great.
Is there a push-pull between both of you? Like, are you more wholesale, she's more rental?
There has been times when it's like that. It was more, I wanted to focus my energy on building the wholesale business to get it to a certain level. Instead of doing multiple things at the same time poorly, I wanted to be the best at it, because what I did see was people would flip houses successfully. I would see intelligent people that I knew who were real estate investors. They'd flip one or two houses and then you go, cool, I'm good at this. Let me move on to the next thing. Let me try to develop. Let me try to build new homes, etc. And my philosophy when we started flipping was, how can we become best at flipping at scale? How can we do a lot of this? If these smart people are flipping a couple houses and then leaving, why are they leaving? Let's do more of it.
Yeah. Did you see it the same way?
Yes. And our goals were always aligned, and they still are aligned. Sometimes we don't see eye to eye on things, but that's actually great, right? Because we push ourselves to kind of think differently about things. But really, we started off flipping, right? It started off with one flip, and then a second flip, and then a third flip, and then we kept going as flippers, and then eventually we got into wholesaling, which we can discuss that transition. And there was a little bit, I guess, push and pull. Like we started the business together, we run it together, we're on the same team, right? And Luc's thought was, okay, let's build this machine out. And my thought, I guess, which Luc's alluding to, is let's build a little bit of a safety net. Not saying that we're not going to succeed in building it out, but let's also take some of that money, instead of investing everything right back into the business, let's take a little bit of the money and put it into rental properties. So we have a bit of a safety net, right? Where if markets really, shift, if a rainy day happens, we've got something else to fall back on. So it was a bit of, I think what Luc's talking about is a little bit of, okay, how much do we shift some of that rental property push, and how much do we continue with building out this flipping and wholesaling business concurrently?
You guys have built an empire. It's incredible. So before the show today, I went on and I checked my email. And because I get all of your email updates, I'm like, let's just see how many emails I get from Bliss. And it was insane. Like I bet there's over 500 emails there of properties that just keep coming and coming and coming. Like, to your point, you have built out a machine. It's impressive. It's firsthand impressive. Not just like, oh yeah, I know these people who are like doing this thing. No, like it's real. It shows up in my inbox almost daily or every other day. There's a property coming out. How do you guys do this?
Yeah, a big part of it is the team, right? And we've bought and sold 650, 700 houses to date, probably closer to 700 mark now.
700 houses.
Yeah. Been a lot of houses.
Over what year time span?
I mean, that's since the first one I bought in 2007, but I'd say the majority has been really since 2016, 2017 has been when that really started scaling up. We were buying our first year full-time 17 houses, then 25, then 95, then 150, and then 250, 261 I think was that year. Yeah.
Was that the peak? 261?
Yes. And this year, with the way the market is, will be probably around the 200 mark, so a little bit lower than last year.
Yeah, you got to cut back, right?
Yeah. The market's a little different. Buyers
Oh my
more
gosh,
cautious,
you
so
guys are
we're
crazy.
More cautious. So.
In the best way.
Yeah.
Tell me about the market now. What are you seeing now versus what you saw before?
Well, with higher interest rates pushing people, so it's interesting, right? Because we're on the buy side, but we're also on the sell side. So it's different forces that are affecting each side. So our sellers that we're working with to buy properties off of, they oftentimes still remember prices at the peak, right? If we're thinking, in Ontario at least, generally early on in the year, right? They're thinking March prices where they're like, wait, I could get $1 million for my house. But now it's a different market, right? That price is not, it doesn't exist anymore. And in large part, it's, interest rates have pushed up and, values have come down. And again, depending on which, submarket, but generally across the province, prices have come down. And so it's managing that expectation of, you can't get this much for your house. And right now, if you were to sell it, you can't get multiple offers anymore in the same way you could back then. It's just a different market.
How do you convince a seller to be like, yes, I understand what you mean. I will take less for my house than what I would have a year ago?
I mean, part of it is just educating them. Mm-hmm. And part of that's why, we have an excellent sales team. A lot of this comes back to our team, right?
How big is your team, by the way?
40 employees.
Yeah. Wow. Yeah. Wow. Independent contractors, T4 staff?
40 on payroll on T4. Yeah.
Wow.
And so, I mean, a lot of this comes back to the highest and best use. And I grew up, my father, taught me about the highest and best use growing up, because my dad did some land development projects and stuff. And I was lucky to learn from him while he was still around. Mm-hmm. So we consider ourselves the best or the highest volume at buying houses. Like we are very good at getting good deals. And that's why we shifted from flipping to a mix of light flips and wholesaling as well, because we found our strength was in the buy. And it was harder for us to scale with the construction side of it.
Yeah. Do you find the money's in the buy?
Generally, yes.
Typically the money's in the buy, and then just don't screw it up.
That's a quote. I mean, money's in the buy, don't screw it up. That's it.
Yeah, pretty much. Yeah. Right. So we look at buying the property. We look at the highest and best use. So that's why we are an acquisitions company. And then wholesaling is one of our main exit strategies, but it's not our only one. Mm-hmm. And as the market's shifted, we've shifted our exit strategies a bit. So we're closing on more deals ourselves, because I understand someone who's doing a typical burr property where they're buying a bungalow, they're converting, adding a basement apartment. They don't know, as the interest rates are changing and prices are changing, we seem to be getting near the end of the changes, I think.
Yeah, I think you're right.
Yeah, it's feeling that way. Mm-hmm. But they don't know where values are going to be when they're done the project, and they don't know where interest rates are going to be when they're done the project. And I mean, they don't really know where rents are going to be when they're done either. Maybe higher, but
we hope.
But so will interest rates,
higher,
and
right? Yeah.
Prices might be going down. So they don't know where that is. So I understand that someone is going to be hesitant to buy one of those properties now, and so they need a bigger discount to make up for it. Or a lot of people who don't want to look at don't look at it as opportunistic. They want more of a sure thing. They're kind of just out. Mm-hmm. And we also find flippers, they don't know where the prices are going to be when they're exiting, so they want a better deal. And so we look at these properties and we say, well, if we're giving such amazing discounts, right, and we are selling, even stuff we're still wholesaling, there's a lot of really good discounts going out there.
Sure.
We're saying some of these just make sense for us to take down ourselves now.
Interesting.
And so we're doing more and more of them. So again, and we just finished renovating and renting out right now a single family in Brockville that we decided to buy because got it through our list. We didn't get a good enough offer on the wholesale side. We said, you know what, this one works well as a rental. Let's keep it.
Yeah.
And so we're always looking, we've built up our rental portfolio to about 100 units because we're opportunistic with that. And a good number of that was bought privately. We bought a couple on the MLS. But,
yep.
We're always opportunistic. So we're buyers first, and then we figure out what the best exit strategy is, and that's what the highest and best use is. If someone's going to offer us $10,000 on a property that we can flip and make $100,000, well, the highest and best use is not taking $10,000, right?
Sure.
And of course, there's transaction costs, there's limits to how much volume we can do, so we still sell really good deals.
So what are those? Let's break into that. So what are those limits? So like when you guys say, okay, if you're doing, let's say 100 houses a year, that's like one every 3 days, or so, one every 3.5 days.
Yeah, 200 houses a year is basically almost one every business day.
Okay.
Yeah.
So then, if you've got that much volume coming through, how do you decide this is the one for us? We're going to keep it, or you know what? Let's wholesale this. We can't take it on. How do you break that down?
And I think that process starts the moment we start looking at the house, right? So if we go out and, let's say we're going out, we get the property under contract. The moment we have it under contract, I mean, we know going out what range we need to be in with multiple exit strategies. Once we've got it under contract, then it's a matter of us taking it back and saying, okay, we've got this great property. It's a deal. We know it's a deal in general. Now, we think about what is the highest and best use for this property that Luc just kind of went over, but we also think, okay, where do we need to be where it makes sense for us to wholesale this property? What's that margin we need as a wholesale? Mm-hmm. And then and our immediate strategy is usually to wholesale because that is our business, right? We're in and out. We like to move volume, right? Yeah. And so when you have 200 houses a year, flipping them all, we don't have that in-house capacity to do that.
That's a lot of bricks and sticks. physically flipping 200
Physically
houses,
flipping, right? And so if we can flip the contract, that's our first, usually our default is, hey, can we flip the contract? And we've got that kind of general number or general range we want to see from our buyer.
Mm-hmm. What's a typical wholesale fee for you guys? I know it ranges. Yeah. Anywhere from 0 to what?
Oh, 0 to 6 figures.
6 figures.
Yeah. Easily. Yeah.
Wow.
Anywhere from like we've gone from like $1,000 to 6 figures, right?
Yeah. What's your highest wholesale fee you've ever got?
Our highest wholesales aren't wholesales because we typically, when there's that big of a spread, we'll either double close or we'll flip.
Right.
But yeah, well, 6 figures.
Okay.
At that point, we want to just keep control of the deal, right?
Yes. Right.
So we're more comfortable taking, if we've got an amazing deal, we're happy to take on those closing costs for the surety of this is now ours. And we can either then assign it, sell it to a buyer.
Once it's closed, move on.
Yeah,
or not.
Yeah.
Exactly.
At that point, we want to control the deal to make sure that, we've got that property locked up.
With the number of deals we do, obviously some deals go wrong. We have a much bigger incentive to make a deal go right when we have a very large spread in it.
Sure.
Then our buyer, who maybe has a smaller spread in the deal, they're going to have less incentive. So if the seller's giving them some issues or this kind of thing, they might push back more on the seller where we might be more accommodating because we really want this deal to close.
Right.
So at that point, we're like, okay.
We'll take it on ourselves.
Or we basically are pre-selling it. So that's what we call the double close. Mm-hmm. We're going to own it for less than 2 weeks and then someone else is going to close on it. That gives us a certainty of what we're selling it for, and we don't have kind of realtor costs on the sale. And we know it's going to be short financing term, or we might just use cash for the shorter terms.
So you'd still market it the same way?
We'll still send it out to our buyers list.
Yep.
It can also help the buyers sometimes it can sometimes help with financing because sometimes, depending on the lender, they don't want to lend on the assignment fee.
Right.
Whereas if we're double closing, they're buying it from us. They've got the full purchase price that they're buying from us. So.
Interesting. Why is that? Why are lenders pushing back on assignments right now?
I think there's some lenders, and some investors have this mindset that if somebody was able to buy it for less, then it's worth less, which doesn't necessarily make it true.
Isn't that the worst when an appraiser comes in? They're like, what'd you pay? And you say, why does it matter? Shouldn't you appraise it based on what it's worth, not what I paid? If I bought it for $1, is it worth $1?
It's just the mentality they go into it with that isn't logical, right? Yes. Because market value, in their mind, they don't see market value as what somebody on the greater market's willing to pay. They just say, well, you paid this much, so that must be what the house is worth, period, end of story.
Yeah.
If you go to a bake sale at 3 p.m. and buy a cookie for $4, but at 4 p.m. they mark everything down 50% to clear out at the end of the day. Is the cookie worth less at 4 p.m., but you're paying $2 instead of $4?
Yeah.
It's not necessarily worth less. You just paid less for something that was equal value.
Yeah.
Because you were at the right place at the right time to get the discount on the cookie.
I'd eat the cookie.
I'd
eat the cookie either way.
Absolutely. So
you created that opportunity, which is what we're doing, right? We're creating opportunities. So
going at the right time to the bake sale, that's what we do.
Yeah.
Right?
Yep.
Sellers are having the bake sale, and sometimes they need to clear out the rest of their inventory.
That's right.
Oftentimes we close on a property because they want or need a very quick closing. We had a property in Ottawa where the seller was about to have their house repossessed. The sheriff was going to show up, and they were in a really big pickle. And so we were able to negotiate what we needed, which was a certain price. Mm-hmm. And we were able to give them what they needed, which was a very quick closing.
Sure.
And our lawyer
hands off.
Hands off.
And a lease back for 45 days, so they could they could stay for 45 days for free, so they had time to find their next place, because we close in 3 business days.
So our lawyer closed in 3 business days. From signing of the APS to the legal transfer of the title was 3 business days.
Because the sheriff was showing up in 5 business days.
Yes. You must have literally taken the purchase and sale agreement to the lawyer with a briefcase of cash or a check and been like, here, let's get this thing done right now.
Our lawyer is actually a friend of ours from law school, so
you're like, hey, we're coming. You send him a text. You're like, hey, we're buying this thing tomorrow.
Pretty much. Yeah.
Those are the best transactions.
Yes,
they are. The fact that you have the skills and the team and the wherewithal and the means to get that done. That seller walked away without a hit on the credit, right? Without any problems, any backlash from the bank, all that stuff.
I'll give you an example. It happened this year in Ottawa. Seller was just kind of done with the property.
Yeah.
We signed the contract September 1st. We closed September 7th. We had it on the market September 27th, sold it September 28th, and the sale closed October 27th.
Oh my gosh.
So signing of purchase contract.
Sorry, was that this year or last year?
This year.
Yeah.
So very recent.
Yeah.
Signing of purchase contract to sale contract and 2-week renovation in there. Was all done within 2 months.
Any pushback from a lender on that? Seeing those transactions happening with a buy and a sell and a buy and a sell and a markup and a sell?
The buyer from us, they bought it through the MLS.
Yep.
It was on the MLS with a lot of interest.
It's just standard transaction.
It became a standard transaction.
Nice.
Sometimes title insurance will ask questions like, hey, why did you buy it for less, or what happened here?
Can you explain a double close? You mentioned double close a little bit further back.
So in the States, it's much more common. We use some American terminology essentially, but certain, especially in states where they close with title companies, they can often close same day in the States where, let's say Jess is selling me a house and you're buying it from me. Mm-hmm. So Jess will sell it to me in the morning, and then later that day, you'll buy it from me. And in certain states with certain title companies, I'm even able to, that the title company will take your money that you're buying from me, use it to pay Jess, transfer the property to me, and then transfer it to you. Wow. So that I wouldn't even need to front the money. But there's even lenders in the States who will do that for like a 1 or 2% fee, just that kind of same day.
They call that transactional financing?
Transactional funding, yeah,
okay.
Exactly. Yeah. So in Canada, it doesn't work that easily.
Us Canadians, we're so conservative.
Yes, and with lawyers, our lawyers are good. Our lawyers are very good in Canada, and they're also cautious, as I previously said. Yeah. So they can't do that. But also, it takes time for title to register, and then you need the other side's lawyer to show up on title, and then you can do the transfer. So in Ontario, we are typically able to close, theoretically, about 2 days after. They are able to usually do it that quickly. We also buy properties in BC. There, it actually takes longer for it to actually show up on title, so we actually need a 2-week delay there.
Right.
But sometimes in Ontario too, we'll still do that kind of week or 2-week delay for time for their lender to get everything together, the buyer's lender, for it to show up on title, and just to account for what if we need a couple extra days, the seller needs a couple extra days to get stuff out. We can kind of build in a bit of a buffer space for that.
So then how do you split up your business between the two of you such that maybe you have a role and you have a role? How does that look? Jess, you want to take this one?
Sure, happy to do so. It's challenging. I'll start with that. It's challenging, right? Because when you build something together, when we were starting off, both of us were involved in all aspects, right? There were just the two of us. We didn't have this 40-person team supporting us, right? Yeah. To take, things off of our plate so we can focus on, the things we need to focus on to build to grow the business once it was built out.
So you can travel to, where'd you go last night? Morocco?
We were in the Canary Islands.
Canary Islands.
Last winter.
Yeah. I was texting was I texting you or was I texting you? We were talking. I was like, oh, hey, what are you doing?
I think we were texting.
Yeah. Oh, I'm in the Canary Islands. I'm like, oh wow, this is fantastic. And I'm still getting emails in my inbox from off-market properties. I'm like, you guys are the best.
That was part of our why we wanted to be able to. Our daughter was still not in preschool yet,
right.
So we spent 4 months there last winter.
That's amazing.
And, 20 to 25 degrees is the high every day. You know, it was just t-shirts and shorts every day there.
Just the name,
Very
the
quiet.
Canary Islands sounds so exotic, doesn't
Tenerife.
it? Yeah. Continue, please. Sorry, interrupted.
Yeah, where were we?
So how do you guys divvy up
how do we do it
the
together?
juggles? Yeah.
Yeah. So starting off, we did everything. I mean, our first flip, I remember it was midnight. Luc and I were cleaning the house that we were flipping. My mom came to help wash the windows because she was like appalled by the state of the windows. And I said, the windows should probably be fine. Like, let's focus on the bigger things. But that's where we started off, was we were both so hands-on with every little detail, down to going to Home Depot and picking out the exact tile we were going to use on this exact, backsplash. To fast forward to now where we've got this big team, over time, and I think maybe you can add whatever you think, Luc, but over time we realized that our time was not best used, both of us working on the same thing at the same time.
True.
Because we're doubling up efforts, and there, of course, will be disagreements about what tile to use, and that's an immaterial discussion.
It's always the tile. Tile and paint colors. Like, no, we got to paint beige. No, it's got to be gray. No.
Yeah. And we both love design, so that was always something we both wanted to be involved with, right?
There's a really good point to be made about highest and best use of design. Like, you can make or break a project with that. So
with tile.
Absolutely. I agree with you.
So really over time we realized, there is tension that's developing because two people should not be responsible for the same thing. And we both have different strengths that we can bring to the business. And for the first couple of years, I was still very much working full time as a lawyer on Bay Street, right? So
you're like running a court case over here, and then over here you're at Home Depot picking up lumber or something. You know what I mean?
That's what it was. Yeah. And it was just trying to manage all of it.
Yeah.
And buying rentals and building out the short-term rental business too. So there was a lot going on. But really, where we are now, where we've grown to, is, Luc is more involved with running the wholesaling business that our chief operating officer runs the day-to-day of, and managing that side of things. I'm more involved with our rental portfolio. Oh. And the short-term rentals we've got.
Annie the A-frame.
Annie the A-frame.
That's
and
right.
Sweet Dreams Rentals. So I'm more involved in that side. And then where we've actually come together, and that's a more recent, kind of project we've been working on, is acquiring multifamily and commercial properties.
Right. I saw you guys posted something about a building in Napanee. Was that right?
We've one in Belleville.
Belleville, okay.
Yes. Belleville,
yeah. A bigger.
A 12 unit.
Yes.
Yeah. And so we divide up our time. We separate the tasks. And this was from the beginning. We kind of knew this because the first flips, we'd be arguing about tile or something. And we said, okay, when we end up working together full time, we need to divide up who's responsible for what. And, at the time we didn't know what it'd be. Maybe one of us is acquisitions, one is dispositions. We didn't know how the business would grow and all of that. But even now on properties, there's the properties that Jess will hold in a corporation, and those are she makes the decisions on those. She makes the final say, but she might ask me, hey, like, what do you think about this design for this or this HVAC system? I can advise her on stuff, but there isn't that. If she doesn't want to do what I recommend, it's her choice. She's responsible for those, and
just then you must be like, no, Luc, we're not doing that. It's mine.
No, but
sorry.
It's more when we are responsible for our own projects, and the other person can advise, but isn't offended if the person doesn't follow the advice. Whereas
that's good.
But it's and so you don't have to take the advice from the person, but the person shouldn't be offended if you don't take the advice. Right. So you kind of separate that. We still want to help each other with each other's projects. So on properties that I'm responsible for, I can ask, hey Jess, I'm thinking of doing this and this. She'll give me advice. And I would say, oh yeah, that's a really good idea. I'll do it. Or, I actually prefer the way I was thinking. That's fine. She's responsible for hers. I'm responsible for mine. And that way we don't butt heads. We help each other and we don't butt heads.
Who has the better design eye?
I think we both have a really...
Yeah. We both love design. And I think that was probably the hardest part for us to let go of working together.
I think Jess is good at design, but stereotypically it's usually the woman who's the design person. I think I'm quite good at design too.
I think Luc is amazing at design. I think you're great.
We're both very good at design.
Interesting. So what would your style be and what would your style be? Like if you had to say like I'm ultra modern or I'm nautical, like how would you trend towards?
I like modern, but it really depends on the property. We keep them quite neutral. Yeah, it's a lot of design is copying what's out there, right? But you have to have an eye on for how things tie together. But the bigger thing is not just unlimited budget. You have to be able to do an eye for design within reasonably priced options and understand how things are going to tie together.
Sure.
So I think like cottages, which, I love seeing older vintage items in it. You have modern mixed in with vintage snowshoes, vintage skis, water skis. Like there's some cool, you can find water skis from like the 80s with really cool neon colors. And like you can tie in these vintage items to modern, because if you take an old house and add in old items, it looks old.
Right. It's just
right. Yeah. But grandma's armchair in an ultra modern house actually can look really cool.
It's a feature piece.
Yes.
Yeah.
Just like, we buy a house with avocado green toilets, tubs, and bathtubs.
Yep.
It looked bad in that house.
Do you think that's going to come back?
I feel like it's making a comeback.
Really?
We probably won't put that in any house, but but I wouldn't leave it in an old house either, because it just looks old.
Sure.
So someone has to intentionally put that in, and then it can look cool. But when it's just old, it doesn't look cool anymore. So you got to mix the two. I like a mix of modern with a few like vintage pieces
to sort of soften it, make it not so cold and clinical, but
add some history and some feel. Actually,
I like that.
I thought we wanted to do maybe one day for a cottage in a more ski area is just a wall of skis over the ages. So you go from really old, bindings,
like wood skis or something.
Wood skis, more modern wood skis with like plastic and metal clips where those skis are still wood, to moving to like aluminum and with brighter colors to modern ones, and just kind of the progress, almost like a museum piece. Yeah. But it draws your attention because there's all these. Yeah, I think something like that would be cool.
That'd be a neat feature wall.
Yeah,
absolutely.
Yeah.
Huh.
And for me, it's very much the. I try to take every house as a separate project and for design purposes, right? Like, yes, there's certain trends I like, but the house really inspires me. So we just closed on a new cottage.
I can see how excited you're getting too. I love that. I love that. Like, it's like internal. You're like, I just enjoy this.
Well, and it's so great because it's I guess I really do love it. And I have no training in design or anything like that. No official, formal training.
Same with my wife. Sometimes that's the best. Yeah. You just have an eye for it.
Yeah.
Right? You just get it.
And I see the house and I say, okay, this is what the house is telling me. How can I update this house but still preserve some of these really cool, authentic elements that come with it?
Yeah.
And make it all work together, right? And it's a challenge, right? You're piecing together a puzzle of like, what piece is missing here? How do we bring that in? The tile choices, right? We went with, we're doing a new fireplace and we picked this really cool Caribbean look tile in a cottage, which is not something that you would traditionally put in, but with the other elements we're combining with it, I think it's going to look really, really cool.
What would that be? Would that be like a clay terracotta type, or
there's 8x8 tiles, and the color tones are yellow and blue.
Oh.
And we've got a black fireplace insert. We're going to have a natural pine on the ceilings, so it's all going to tie together. Then
we're going to make a mantle out of a tree from the property.
Oh, I love that.
Yeah,
that's so cool.
Yeah. Got a ton of trees, so we've got.
Actually, I know we're going into this, but one of the things we did recently was there's someone on Facebook Marketplace on the Quebec side in Gatineau in Ottawa, on the Quebec side, selling a bunch of windows. He had a bunch of angled windows.
Angled windows?
Yeah, like the triangles you'd use for A-frames. And
things really?
Like that. They're unique, but this guy is just clearing them out. He had bought a bunch of clearance windows, I guess things that weren't installed or whatever. And so our guys went out and just bought like a dozen angled windows. And now we're just going to throw random angled windows into coach houses as we build them, because we can use whatever window we're paying $150 a window instead of ordering these custom would have been way more.
Yeah.
But now it's kind of a unique piece. Even as you walk up to this little coach house, it's like, oh wow, this place is a little different. It's a little special.
No way.
It's not going to be a negative to have a triangle window on a house, or if we could get round windows, I'd do that too. It's a little bit of difference, and something like a small coach house that you build, a tiny home, having that kind of difference can be a really nice touch.
Cool.
Make it unique.
It's that piece of the puzzle that we're trying to fit. Okay, now which window fits in which house, and where do we put it? How do we lay it out?
Well, if you guys do a handful of them, like that could become a portfolio piece for you. Every coach house you build has that stamp, and that's your thing.
Yeah, and it's so inexpensive to add $150 window nowadays.
It's like a modern vinyl window, or is it a wood frame window?
Modern vinyl.
Really?
Yeah.
Some of them are black on the outside, some are white. There's a mix, but
cool. Yeah. Wow. I like that. So what do you think? Okay, switching back to wholesaling for a second. What do you think makes you guys different? Obviously, you've grown something substantial. How do you think you did that, and what do you think made you different such to get you to this level?
I'd say one of the things is we were the first ones to do it at scale. Because when we started wholesaling in Canada, people thought, you can't wholesale in Canada. Or they'd been on other wannabe wholesalers lists who had taken a course, and then they basically got MLS deals sent at above market value to them. Right. And they're like, I don't even want to get on a wholesaler's list. Honestly, it was hard to get people to sign up at first because they thought it was a waste of time. And then we were the first ones to do it at volume. There were people doing it before us. Aaron Moore was doing before us, but not at the volume that we got to. And you see a lot of wholesalers where we were their origin story. Mike Lee, we bought his first deal.
He was on the show.
Yeah.
He mentioned you guys.
Yeah. Michael Lee, his first deal.
I met him at a Panera Bread.
Oh, yeah.
When he was first getting started. I met him the day before. So I think, I don't know if Mike Lee's episode's been released yet. It'll be in the first, the top 10 if it has.
I think it has, yeah.
Okay, so maybe it has.
Yeah.
And I met him at a Panera Bread, and he left that meeting after we talked about wholesaling to go and see you guys at a meetup group. And then he's like, I'm going to be a wholesaler. And then he blew up.
That's so funny.
So he owes us. If he's watching this episode, he owes us.
Yeah. Take note, Mike.
Yeah.
Adam Martin's first wholesale deal from Cashflow Tribe. We bought his first deal and wholesaleed it in London, Ontario. And I mean, obviously, after that, they started wholesaling way more. They grew this whole team to wholesale, and they taught a lot of people about wholesaling. So again, we were his first deal. Even Austin Ye and Waylon, Waylon bought a deal off of us, and that was kind of what gave him the idea to wholesale, was buying off. So we've been the origin to a lot of the wholesalers who are doing higher volume. So yeah, the question was, what makes us different? It's understanding real estate. So it's not just, we didn't just come from wholesaling. We already had rentals. We were flipping. So we understood real estate as a whole. So we know what made a good deal. And I think we brought a more professional background to wholesaling, more sophistication, coming from the legal background, building out a team of experts. Because when we started, we were doing everything ourselves. Now, everyone on our team is better at almost everything than we are. People who answer the phones are better than we are.
Yep.
The acquisition reps are better than we are. The dispositions better than we are. Because that is all they do, and they have become absolute experts. And we pay people very well. Mm-hmm. And so we bring in very good people to our team. And we built it out like a real business. We have a COO who runs it. So you had asked a little bit about how the process looks. And basically we have a 4-person marketing team. And so they focus on a lot of different marketing channels, and they market. And we're in Vancouver, Greater Metro Vancouver area, the GTA, Ottawa, and Montreal.
Wow.
And so we market.
Those are big markets.
Yeah.
Yeah.
Probably cover a good amount of Canada's population in those markets. And so, our marketing team markets to those markets, and then we either get inbound marketing, inbound calls. And so we have a lead intake team that answers the calls. They filter through for motivation, and then we send it across. They set appointments for our acquisition reps, who then go on the appointments to try to buy the homes. And if they buy the homes, they then prepare an ad with the details of the home that gets reworked by our dispositions team, which then tries to sell the properties and sends it out to our buyers list. They filter the calls. They show typically the property to our buyers. And then we have a transaction coordination team or a closing concierge team that handholds the seller and the buyer to make sure the deal's going to close, increases our odds of the deal's closing. And we work with a few different lawyers to close on our side. And then, it gets through to that side, and accounting deals with the back end.
Wow. Your accounting team must be fairly substantial too. That's a lot of volume.
They're very busy.
Yeah.
Because
no doubt.
they not only manage, the wholesaling flipping business, but also the rental portfolio, the short-term rental business. It's all one, right? It all comes together.
Yeah.
And
there's external bookkeepers, but yes.
We have external companies, but
that do the bookkeeping, but there's still a lot, because they do a lot. Our finance person does all the deposits for all these properties. There's a lot to do. But one of the questions earlier about highest and best use too is something we've shifted to in this market is when an acquisition rep buys the property, they typically prepare an ad and send it. Now they also prepare a wholesale spreadsheet. So we have a Excel document, fill out the details, what they expect, and they give us their viewpoint on, at this price, this is what we'd make on a wholesale and whether it's worth it or not.
As if you're going to take it down yourself and close?
If we're going to close and then resell it, that's the idea.
Yep.
Because it gives us both options, but also helps us understand what is kind of our bottom line. We're going to try to sell this to our wholesale buyers. But if we think we can make significantly more wholesaling it, then we're not going to take a low offer making a small assignment fee because we have the other option. But there are other times when it doesn't make sense to wholesale, but it might be if your neighbor's house comes up for sale, you might say, you know what, I prefer to buy this so I can control what happens to it.
Strategically.
And so you might be willing to pay us $20,000 when we look at the numbers and say, you know what, we might break even on a wholesale here after all the costs.
Sure.
We got a discount, but if we're just cleaning up and reselling it between realtor commissions, land transfer tax, closing costs, legal fees, financing costs, we're going to break even on this. But for you, it might make a lot of sense.
Maybe it's a land assembly or something.
Yes,
maybe,
absolutely. Or even just buying rentals in an area, that might not make sense to resell immediately as a wholesale.
Yeah.
That would be something that's more geared towards a flip. But as a rental, it might be a really good cash flowing property. So that might say, well, our wholesale spreadsheet doesn't make sense for this, but as a rental, there's still going to be someone interested in this because it's a discount and it makes money. So someone's going to want it as a rental, but it may not sell for a lot more, enough more on the MLS to account for the transaction costs.
Have you guys ever thought about becoming realtors, or is wholesaling more your thing?
Have we considered it? Has it been an option? Sure.
Yeah.
But we've never really given it serious thought. Again, it's focusing on what we're good at and the competencies we've developed.
Yeah.
And really what Luc was alluding to, our team, we've trained, and worked with our employees to be real experts in the different fields they're in. And that's what they do. And we work with a lot of realtors, side by side. But bringing that in-house hasn't been something we've necessarily thought of, because a lot of times too, it's seen as two different channels, right?
Very much so, yeah.
For home buying and selling, right? And
there's a lot of people that try to become wholesalers, like, you know what, this isn't my thing, or I'm not very good at it. Obviously, this isn't the case here. But then they transition to becoming a realtor because open market is more their thing. Whereas
we're
you
the
guys
alternative.
You're the opposite, yeah.
Yeah. We're like the 1%, right?
Yeah.
Where it makes sense to work with us. So
what do you guys say to folks who... Wholesalers are buying off market and they say, you know what, wholesalers are taking advantage of people, where realtors maybe aren't. What do you say to those people?
What we say is just what I said. For 99% of the population, it makes sense to list with a realtor or list on the MLS. You can list independently too. And to get the largest exposure to the market possible, if price, your sale price, is your motivating factor. If you want to sell for the highest dollar, you want to market to the greatest number of people, right? And have more people show up and view the house, put offers in, etc. But if you have circumstances where the purchase price of the house you're trying to sell isn't your number one motivating factor, that's where we come in.
Sure.
So where we can come in, we can offer an alternative solution to people who are looking for something that isn't the top dollar. We've had so many different examples of, someone, right, their house is about to get repossessed. If you have 5 days until the sheriff comes knocking to remove you from your home, you're not going to have time to even speak to a realtor, prepare the listing, them take photos, get it listed. It takes some time to get live on the MLS. You don't have all that time. If you need to sell now, if you're in a time pressure, we're the alternative, right? And at that point, price isn't your motivating factor. You want to just, keep your house, keep your equity, not have it tied up for a year or two while it goes through the sale process.
It's funny. You guys would have closed on that particular property before it would have even been listed and live on Realtor.ca.
Oh, absolutely. Yeah. So that's one example of where it doesn't actually benefit the homeowner to work with, a realtor necessarily.
There's so many
examples where people just have certain specific situations, and some of them can get a little bit, surprising, where, one of our sellers had over a dozen cats in her home. Yeah, so it was a cat house, right? It was a cat house. And she was worried that if she listed, on the market and people were coming through for walkthroughs, she'd lose her cats. And so her priority was not, I need top dollar to get the biggest exposure, was, hey, I need a process that works with me being able to keep all of my cats in the house. And she needed a couple other things, right?
Sure.
And if we're able to work with somebody who has those needs, we can say, hey, no one's going to come through your house. Your cats are safe. You're fine. Let's work out the different terms. Isn't that a really
interesting motivation?
You'd be surprised.
We sometimes go on the interesting ones, but there was another one where the adult son wouldn't leave.
Yep.
And so the father's just like, I'm selling the house, so he has to leave. I couldn't kick him out otherwise, but if the house is sold, he's going to leave. So,
oh my gosh.
That kind of stuff. We've had times where they want to buy another house, but they don't have the deposit money. We've fronted deposit money for the next house and registered it as a mortgage on the property with a long closing, so they could go put a deposit to buy another house, that kind of thing. We pay moving costs. There's embarrassment when you're in a hoarder situation or deteriorating situation. There's sick family members. It's not your priority. There's so many. You bought a house off of us, and right before
I've bought a few houses off.
Yes, you have. One had the old chimney removed at the bottom, but not the top, and it was propped up with 2x4s. But you were just telling us how the seller was so thankful to you.
Yes.
For buying her house. That we're not taking advantage of that seller. That seller is appreciative of what we're offering, and so it's just. We're not tricking sellers into selling to us. We're giving them another option. And I think I've seen this a lot from realtors, where some realtors are like, oh, they're taking advantage of people. And I would say what I've realized is the best realtors actually understand what we offer and appreciate it. because the worst realtors are the ones who say, well, they didn't get the most money.
Right.
And that tells me that realtor doesn't understand that the seller might need something else, right? And you're not helping that seller get something else. Oh, well, I really need someone who's, I really need easy showings. Well, you're not going to get the most money, so I'm not going to help you do easy showings. That's not a good realtor. They're not doing what's best for the client. There's ways that if more realtors understood that it's not only about getting the most money, they could actually help more sellers, but they're not doing it. And it sometimes creates a void that we fill because people have experiences with realtors that aren't listening to their needs.
Sure.
The good realtors listen to needs and say, okay, you might be getting a little less money, but I can help you get what you need. And that's more important.
In the financial industry, they call that KYC, know your client.
Yeah,
Yes.
absolutely.
Yes.
And I think that we're hitting on, we're answering your question that you asked, a while ago now, we're verbose, but it's what makes us different, what makes us unique, what secret sauce do we have? I think always it's been trying to think outside the box, trying to offer solutions. Like if we think at the very, very base of the company we've built out, we're a solutions company. We provide solutions to homeowners who are facing some sort of distress in their lives.
Bliss Realty, reverse engineering your housing problem or something. Right?
Really.
It's your handle.
But that's what it is. And so we've come up with a lot of different creative ways to help sellers. And it's about creating a win-win. Like Luc said, a lot of our sellers are so grateful we got them out of a situation where they felt overwhelmed and didn't feel like they had options. And so we can work through that with them.
Does that come at a cost? I mean, you have to have fairly substantial margins to be able to do certain things, fronting cash deposits or fixing up homes or whatever. Does that come at a cost?
Absolutely. Yeah. We need the price to work. It's that simple, right?
Yeah. What is the typical cost of acquisition for you guys? If you send out marketing, you're looking for X number of houses, what is your typical breakdown?
It changes. I mean, again, we have a lot of payroll, but if we're just talking direct marketing, it's gone anywhere from $3,000 to $15,000.
Mm-hmm. $3,000 is very inexpensive.
Yes, it kind of depends on the time, how things are going, which marketing channel. Right now, the cost per acquisition is much higher because our marketing costs are high. And
are they higher now than what they used to be?
Per deal, because there's fewer deals right now with the way the market is. The deals have to make more sense, so it's harder to get them. So per deal that we close, we're probably closer to $15,000 a deal mark to just in marketing without counting for payroll.
Plus all your back end and overhead and stuff.
Yeah, exactly.
In addition,
it takes quite a bit to do that. And,
So then, moving forward towards the end here. So you guys have built this awesome business. You started up. You've done the DIY. Now you've got full-time staff. You've got this awesome machine, right? This is a full-fledged business. Have you ever considered that this might be a sellable entity when you're done, not just a real estate machine for you? When one hand washes the other for your rental portfolio.
I think we've built it in a way where it could be a sellable business. Mm-hmm. I think wholesaling in Canada is still in its infancy, and I don't know what the future holds. So I'm not sure who the buyers would be if we were to ever sell it. It's not impossible. I think the reason we wouldn't go to sell it right now is I think the multiple we would get is just too low. It would be worthwhile.
Interesting.
I don't think we're like a tech startup or something where the multiple is going to be very high and then make it worthwhile. I think if we're looking at getting 2 times multiple or something, then we'd rather just own it 2 years and keep operating it.
Right.
So I think the multiple 2-3 times whatever, if it's too low, it wouldn't be worthwhile. And I think because it's a relatively unknown industry, we would be probably on the lower end of multiples, and that would make it less worthwhile. But we have built it in a way where it's run by others, and we're more involved on the rental side, and a little bit more. My end is a little bit more the real estate. Looking at the highest and best use of properties, looking to see if it can be developed, trying to kind of more complicated properties, how to make sure we convey the opportunities properly to our buyers. So I look at that kind of stuff and deal with that a little bit more for our team who has a little less experience with that. So that's where I'm a little bit more involved. But on the day-to-day of a typical house, I'm not involved with it. So
yeah, that's a great place to be. It's a business.
Yeah, it's a business. We don't need to be there. We choose to be there, especially with the markets changing.
Isn't that freeing? That's so freeing.
It's wonderful. Yeah.
Looking back, what would you guys do differently? Knowing what you know now, 5-10 years ago, what would you do differently, if anything at all?
That's a big question. I think maybe one thing that I would say is we could have grown this bigger faster. Now in hindsight, right? In the moment, we thought we were growing really fast because no one else was doing it. So there's a little bit of, hey, we're the first ones to do this.
You were. Just saying. You were growing quite big, quite fast.
we were growing big fast. I
Yeah.
guess we were, right? But when you think about it, there was no one else doing it alongside us. So it was always kind of checking ourselves saying, hey, are we going too fast, too quickly? Are we doing too much? Should we hold back
Because
a
you were
little bit?
blazing the trail, you didn't have anything to compare to.
We had no one else to really compare it to and grow alongside with, right? Now there's a lot more, entrance into that market. But looking back, there was such an opportunity in that market. And with the knowledge we have now, having built this out, the first time around, I think if we were to go back with that knowledge, we could have really built it out faster and more efficiently in a better way. But that's just with hindsight,
Sure.
right?
Yeah. And I think there was almost 2 phases in the growth. There was the first phase, which was me on my own with Jess on weekends, trying to figure out how to do, like, what were the best practices, what systems, what worked, what marketing worked, what renovation style worked, what financing worked, just trying to figure out how to make it work as a business. And a couple years of that, then we had it dialed in, like, okay, we're making good money from this, we're regularly buying good discounted deals, we're good at buying the deals, we're wholesaling stuff. How do we scale this? And that was the next phase. It was first figuring out how to do it well, and then second, scaling. So if we had, I guess it could have shortened that learning curve of figuring out how to do it well was important because that built the foundation to scale off of.
Yeah.
Where some people try to scale before they even know what they're doing, and it's very hard to have other
You're
people
scaling
doing
chaos.
it when they don't know. Yes,
Yeah.
exactly. And I think what helped us scale too was hiring. We tried hiring a couple people, didn't work out. We hired someone who's still with us today, in a dedicated role. They're very good at their job, and then we were able to then, okay, they're successful. How can we build on that? They can help teach other people parts of the job, and then hiring, a COO with experience in hiring and training. That helped a lot too because they were able to do the hiring and training, which was not our strength.
Did they grow into that role of COO?
Yes, they started
kind of,
off as a sales manager,
Yes.
right? Which is what we needed at that time.
Yeah.
And then they grew into
Very
COO
quickly.
very
Get
quickly.
the chops, learn how to do it, then learn how to manage people.
But they already knew how to manage people. So they
Oh,
had
wow.
the
They
person.
had a lot of
That's a
experience.
bonus.
Our COO had worked at 411.ca
Yep.
and had scaled a sales team, a phone sales team from 5 or 10 people to 100 people over 10 years. So they had experience scaling and growing a team.
Yeah.
But he was a sales team. So they, and if you look at our COO, they don't have the typical operational profile when you're looking at, the disc test or the culture index. They don't have the typical operations person of a COO, but they have other skill sets. This person is excellent at certain parts of the job, and some other parts aren't their skill set, but nobody has every skill set you need. And so what they lack in one area, they make up more than make up in other areas. And as together, they're excellent at running the business, and that's why we're still involved a bit because there's other parts that we take care of.
Sure.
And we have other people on the team that might take care of parts that a different COO might run, and then we don't need, let's say, a sales manager separately because they can also do that. So it's all, but finding the right person to help grow with us and not being able to pay well for the right person when we had a proven model. We weren't cheap about it.
Mm-hmm.
We're frugal people, but we're not cheap in the right areas.
Right.
So you don't want to cheap out on people that are important to you, that are like an important part of your team. You can't be cheap with that.
Right.
Because, what you give out, you get back, right?
Yeah.
If you're not paying well to someone, they're not going to give you what you need.
How do
You're
you
not
think?
going to get the right person.
How do you think your staff sees that if you guys are making, assumingly, a bunch of money, right? And then you have a bunch of employees who are theoretically 9 to 5 employees. When they say, "Oh, the business owners are making so much money," maybe I'm not adequately compensated. How do you combat that, or do you ever have to combat that? Is that just a non-point?
We honestly have never really had to combat that. I mean, and a large portion of our employees are directly affecting the bottom line, meaning profits, right? They are directly related to us earning profits,
Yeah.
right, in their roles.
commission-based and-
So a lot of them are
they're commission-based.
as a result. And so
So the better they do, the better
That's
you
how
do, the
we've
better
set it
everybody
up.
does.
Well, at least the best paid
Exactly.
people are commission based.
Right.
Because
Yes.
they if they want to raise, they can earn it.
Get paid to perform.
And
Yeah.
a lot, I'll say this much: some of the a number of our employees have made more money than we have paid ourselves from the company, and it's not one or two people; it's a number of people.
Yeah.
And so when you have that going on in the company, where if you work hard, you have unlimited potential for income, and people see that. And they see how we're generally frugal in our day-to-day life. It hasn't really come up as an issue that much. And like Luc said, we pay well. And that was something that was, I think, really important in our growth, which was showing our employees that really delivered, that they're valued and that their growth will come with growth of the company. And so as we've grown the business, our employees have grown too with the business. And so they're invested in that with us.
That's a good point.
Yeah.
It's a very good point. What do you think your staff would say about you today? Finishing up with this. What do you think your staff would say about you today if you weren't in the room? We'll start with you, Jess.
You probably have a better idea because you talk to our staff.
I do talk to your staff. What do you think they would say about you? Good, bad, or indifferent? And there's no right or wrong answer here. What do you think they'd say about you?
No, I think our staff really value us as business owners. I think they understand that. I think they appreciate, first of all, that we give them enough training to know what they're doing, and then we step out of their way and let them be the experts at it. But we're available to help. And like you said, they're paid well. I think most of the staff, pretty much everyone, would tell you they're very happy with their job.
And we have a very low attrition rate, right?
Yes.
That makes me think of that. We've had very few people turn over in the company. People that started off, years ago with us when we were first starting are still here today. Some of them in more advanced roles than they started off with. But when we find good talent, we are so focused on keeping that talent, developing it, helping them develop as leaders within the company. And I think they feel that with that development, that there's a bit of, I think, loyalty that's been really built. And they've seen where the business started and they've seen where it is now. And that growing together, I would hope, and I know they're very excited about that. And so many of our employees often ask us, hey, what's next? Can I get involved in your next project? Someone on our closing team just started getting more involved in our renovations because we're doing more hotels and more flips. She was like, I really want to get involved with this. I've got the capacity. Can I get involved with these projects? And so we see a lot of that where, our employees want to take that next step and want to help out wherever they can. And so I see that as, a lot of buy-in. And so, we want to treat them well as well. Like it motivates us to do more for the employees.
Right? Yeah.
And that's what we're thinking of, like when, we brought up selling the business. I can't even imagine that because this is our family.
Sure.
Like this is our business family.
Yeah.
Well, and if you, at least we don't have, we're not involved with everybody in the business, right? There's certain parts of the business we're more involved with where we add more. There's certain people we talk to several times a week or almost daily. And there's certain people that we only see on kind of our weekly meetings.
Yep.
But the people we're closely involved with, I think there's also an element where they see that we care. So for example, our main dispositions person in the GTA, because we have a different one in BC, seeing, her saying, she's noticing that she's working a ton, right? There's a lot of deals coming in. Check in, how's your capacity? Oh, it's okay, I can handle it. Okay, but for how long?
Right.
And seeing, hey, this is not going to work out well because at some point, as much as you love your job, there's going to be burnout. And so, at that point, we go, okay, she's working a lot. We're growing still. And so there's going to be even more. So let's catch this bottleneck before it happens, before she burns out, before she's unhappy with her job, before she's miserable because she doesn't have time to spend with her family, etc. Let's try to get ahead of this. And so, it was discussing with the CEO, okay, what should we do? She's really good at her job. Other companies, in the US, they might just hire a second dispositions person to work beside them.
Yep.
But because they're commission-based, it might reduce the income. But you know what? She's really, really good. Why don't we look at getting her an assistant who can handle parts of their job that take up a lot of time, like showing the properties to our buyers? So let's bring her an assistant. We're not cutting down her commission rate. So she's still making as much as she would, but now she has more capacity because somebody's helping out, and we're eating that cost of the extra person.
Right.
But
presumably, though, if you hire that assistant for X number of dollars per hour, that then frees up her time to do her job better, which makes more money than what you spend.
Absolutely. Yeah. And because she's good enough that we know better to have her being the main person with an assistant rather than having two people with her being really good and the other person maybe not being as good. So, but just, I think she would know and appreciate that she was saying, oh yeah, I can handle this. And we're kind of more forward thinking going, well, for how long? Let's get you help now so that you don't get to the point where you're burnt out. Because it's going to take you time to train this person. Yep. And when you're at the burnout point and you're trying to train someone at the same time, it's too late.
Yeah, there was a sign in the airport. I was flying out. This is maybe about 5 years ago. I was flying somewhere, and I'm in the airport and I'm getting like some candy or something at the till. And there was a sign up on top of a fridge, and it was an advertising sign, and it said, "When you're thirsty, it's too late to dig a well." And to the same point of what she may be going through is like when she's thirsty, meaning burnt out, like it's too late to hire somebody because now she doesn't have the capacity to train them.
Absolutely.
Yeah.
Right? And that was a big part of us scaling quickly. It was, okay, so we're doing well on this, let's increase our marketing.
Yeah.
But instead of just increasing that and then waiting to see what happened, we go, okay, if we increase our marketing, we're going to get more phone calls. Let's start hiring a lead intake. You know what? Our acquisitions person is near capacity. We're going to need to hire someone else to help with acquisitions. So it was digging the well before you're thirsty. It was planning. If we're going to increase in this area, like if we're going to plant more crops, we're going to need more water.
Mm-hmm.
Let's dig the extra well. Right? So let's dig the other well now. And it was to scale quickly. We couldn't just wait for each bottleneck to show up and then deal with them. We had to pre-plan what's going to be the next bottleneck. Let's start working on that now. If we do fix that bottleneck, what's the next one, and so on so we could keep ahead of our bottlenecks as much as possible. And that was a big part of growing quickly.
Man, you guys are the best. Thank you so much for being here. Being on this side of the mic, I can genuinely say that having you here in studio, your tenacity and your spice and your flair for being business owners and being good, kind-hearted people very much shows through. I think what you've done is fantastic. I think it's inspiring to those who are new wholesalers, to those who aren't wholesalers at all, and to those who are existing wholesalers. You're definitely an inspiration to everybody. So thank you very much for being here today.
Well, thanks for those kind words, Ryan.
Where can people find out more about you? And more importantly, where can they get on your buyers list?
If they go to offmarketbliss.ca, they can sign up there /buyers. Or click on the buyers link and you can sign up for our different markets. Like we said, Greater Metro Vancouver area, Greater Toronto area, Ottawa, and Montreal. You can sign up there.
We're also on social media.
Yeah.
You can follow us at Jess Luc Invest, JESSLUC Invest.
On Instagram. Yeah.
On Instagram and Facebook.
Yeah.
Fantastic. Thanks, guys. Thanks for being here.
Thanks, Ryan.
Thanks, Ryan.
Thanks again for listening to the Highest and Best Use podcast. Reminder to sign up to the book at thehighestandbestuse.com. I'm your host, Ryan Carr, reminding you that good deals are found, great deals are created. Like, share, follow, and subscribe, and we will see you on the next episode.